Hello and happy Monday to you all. I'm Natalie MacDonald and you're joining me for the first Targets in Focus interview of the new trading week. Olivier Korber of Societe Generale is on the phone with me now to share his exclusive thoughts on the G10 pairs. Olivier, firstly, can you tell us how G10 pairs have fared in recent trading? And similarly, looking to the week ahead, what do you see as G10 drivers this trading week?
The largest move recently has been anti-Bolivian currencies in Australian and New Zealand dollars, which lost about 3% each. The dovish RBA talk and expectation for cuts hit the Australian dollars, and bad news regarding dairy exporters in New Zealand hit the New Zealand dollar as well. For this week, we have a quite busy week again, actually. And tomorrow we have, I say, the RBA meeting, from which we expect the RBA to cut 25 basis points again. On Wednesday we have the inflation report, which can be a large mover for the sterling. On Thursday we have the Bank of Japan meeting, which is a mover for the yen.
Despite Friday's disappointing US jobs report, demand for the greenback has prevailed in euro-US dollar trading. How long-term do you see this inflow into the US dollar, and how does it shape your forecasts for this pair over the short, mid and long-term period?
Last week, jobs data has been a mixed bag, actually. The non-farm payroll number was quite soft, but the unemployment rate dropped 2 ticks lower. It's mostly due to the participation rate in the US going back from last month's gain. But our key call remains intact. We expect QE tapering to come in September, and it will trigger much more inflows in the US dollar, which is shifting from an investment, from a funding currency towards an investment currency. And with the unemployment rate going lower anyway, and the Fed hinting that 7% will be the level at which quantitative easing needs to end, the timing is going to be tight, and they will have to taper soon. So we expect really the dollar to be bid again in September.
The pound sterling starts the week on a bullish trend against its US counterpart, as UK services PMI data confirms a UK recovery on track. As markets now consider how Bank of England Governor Mark Carney's leaning towards forward guidance will correlate with an improving economic sentiment, talk us through your expectations for this pair.
Yes, the market is really expecting something bold coming from the inflation report. Mark Carney is due to announce something about forward guidance, and most of the uncertainty is about what will be the form of the forward guidance we take. So as the market is well prepared to do something strong and quite short and sterling, I would expect a buy the rumor sales fact price action, with the sterling going up first, but then in the medium term going back under pressure, since forward guidance will have mechanically to lower sterling rates eventually. So first, I think that the very short-term risk is a squeeze in sterling, but then sterling weakness will have to return.
And lastly, US dollar Japanese yen has opened lower this week as markets wait on the Bank of Japan's rate decision on Thursday. While no action is expected, what could stimulate a large move for this pair?
For the Bank of Japan meeting this week, we don't expect any change in the policy, mostly because we are seeing some signs that Abenomics could eventually end the deflation, because core inflation numbers are going up, and we don't expect monetary policy to move, as the inflation target they have is more and more realistic. So as dollar yen move has been more about Japan than the US, maybe more than the US QE tapering that we expect for September, maybe the big driver for dollar yen will be the announcement this autumn of the third hour's structural reforms for growth from the Japanese government, which are very, very awaited by the market. The government announced such reform this spring, and the dollar yen was very topish at this time. It marked the end of the uptrend since the government disappointed. So it will be a second try this autumn, and they won't have another try to disappoint again. So I would say that the next action to move the dollar yen significantly will be the announcement of third hour reforms by the Abe government.
Many thanks for your comments, Olivier. Well, that's all for now. For more news on the economic news and events which could help shape currency markets this week, stay tuned for the week ahead with Doran McDermott. But from me, it's goodbye for now.